Not only is it the best time to buy silver, but this is an opportunity seen only once in a generation. We'll discuss what one analyst says about the special opportunity that presents itself in the world of silver and making a purchase. Let's discuss it as we explore. For some, there's never a bad time to buy silver. Now, for me, I disagree with that and also disagree with some of the analysis I'm about to present to you here from Christopher Paplava, who is the Chief Investment Officer of Financial Sense Wealth. And this is from his blog, and it makes some good points here. There's no question about it, with some data that goes back some time talking about the opportunity. And that opportunity revolves around, yep, you guessed it, the gold to silver ratio. Now, keep in mind that the gold to silver ratio is very different now at 100 to 1, which is where it's resting at this moment in time as I record this video, and where it was the last couple of times it was there or above. But we'll get to that in a moment. But I think that's something you have to keep in perspective here as we look at trends and making decisions on when and how to buy. Because in my view, you've got to make that decision for yourself. Now, for me, I still believe in silver. I've focused more on gold recently, and part of that is because I've been seeing the trend for quite a while now, moving up to this number that we're seeing right now, triple-digit gold to silver ratio. That's why since 2017 I have focused more on gold, but I'm still buying silver. In fact, my most recent order came in from Summit Metals, and it's nice. They have these cool flips here that are kind of flexible here. They show that this piece here, this is my first 2025 silver maple. Let me tell you something, it is beautiful. It really kind of shines here, brilliantly done. The Royal Canadian Mint is second to none in terms of quality. And it really shows with this Canadian maple leaf here in silver. So I got that as well as my second Vortex bar. These Vortex bars have been hard to keep in stock over at Summit Metals. They dropped out of stock for a moment, and they restocked and came in and shipped this thing to me fast. Very, very nice indeed. And Scottsdale Mint, a really great mint with great products, and this 10-ounce bar is one of my favorite 10-ounce bars right now. So Summit Metals, check them out. Next time you feel it's right for you to make a purchase of silver, check out Summit Metals. They are increasing in their selection. Now they have the Salivate metal rounds in stock. The link to that will be in the description below, as well as the ability to take Zelle for your transactions. I don't know many dealers that take Zelle, but Summit Metals now takes Zelle payments. So, with that being said, you can see here, this is 100 ounces of silver in 10-ounce bars and one 20-ounce bar to 1 ounce of gold. And this is something we've not seen in a little while. It's been about 5 years, a little over 5 years since we saw the ratio go over 100 to 1. But again, it was very different back then. So let's see what Christopher Paplava has to say about this. And really, this comes on the heel of the announcement of Trump's 90-day pause on tariffs. The S&P rallied more than 9.5%, which was the biggest rally since the 2008 crisis or the Great Depression. However, what's even more impressive is what happened to the precious metal markets, something we've only seen 3 times over the past century. As of April the 9th, the gold to silver ratio reached a rare 100 to 1, meaning gold is now 100 times more expensive than its industrial counterpart, according to the spot price of the metals. Due to the historically rare price disparity in light of the charts that he's going to reference, he actually opted to boost their firm's silver exposure. But there's one strong hint here. That is the industrial counterpart to gold, silver. That's how he describes it. That's a clue as to why we have to be very cautious in approaching this. Now, the first time it had occurred was at the end of the brutal bear market that began after the Hunt brothers cornered the silver market and drove it towards $50 an ounce in 1980. to the low seen in 1991. Now, when it was driven up that far, the gold to silver ratio, I think, narrowed to about 16 to 1, if I'm not mistaken. That's just running off of memory. I'm not sure exactly, but it's somewhere around the high teens, if I'm not mistaken, when it reached $50 an ounce in 1980. And then when it went down to its low in 1991, from 1980 to 1991, that is 11 years, and took the fall. And at that point in time, gold was 100 times silver in 1991. It literally marked the end of the bear market in silver, and then after that, it went on to rise 60% in the following 2 years. So there's a pattern. There's what he's saying here, that provided an opportunity. If you could have seen what was going to happen in 1991, that would have been the time to buy silver compared to gold. The second 100-time event occurred in March 2020. Many of us here in this audience, in this community, remember it well. I remember documenting exactly what happened during that time. It was a very significant bottom for silver. After peaking at just under $50 an ounce in 2011, silver entered a prolonged bear market. Remember that well, too. This channel was born during that time. In fact, another recent silver purchase I have are these little cap bust silver rounds, which I think are really cool looking. My local coin shop still has a few of them left. I may pick up a few more of them, but I got 3 of them now. They're just really cool looking. In fact, I'm going to place that right here because who knows, by the time the markets open on Sunday at 6 p.m. Eastern time, which I hope you will join me, because if it was anything like last week, it's going to be a wild night. And we could see the gold to silver ratio rise to 101 to 1 and even higher. But nonetheless, after peaking at $50 an ounce in 2011, which, by the way, the gold to silver ratio then, after its peak, was about 32 to 1. So a very different situation there. 52 to 1 from 16 to 1 in 1980 to 52 to 1 at the peak here in 2011, or 32 to 1 rather. Silver entered a prolonged bear market, eventually hitting a low in March of 2020 amid the COVID-19 pandemic. That low, by the way, was very briefly below $12 an ounce, $11 and change. Crazy to think about, but that actually happened. I remember I reported on it back then. With gold trading at 100 times the price of silver at the bottom. In fact, that ratio ended up being right around 126 to 1. That was the peak, 126 ounces of silver for every ounce of gold at that time. With the gold trading there, the price of silver at the bottom, silver then launched into a remarkable rally, surging over 140% in a matter of months, and it did that. It was pretty wild to see. Now, on April 9th, the third opportunity that had occurred here is, well, this rare milestone hit once more, indicating that silver is historically undervalued compared to gold. And this ratio could certainly climb higher, implying gold might continue to outpace silver. The author here believes it still presents a unique opportunity when viewed through the long-term historical lens. And ideally, and on the surface, that does make sense. But we have to look at this uniquely. It's a unique situation we're in right now. Very different from those other two situations. We'll get into that more later. The recent move north of 100 times didn't occur after a prolonged bear market, but rather a persistent slump in silver relative to gold, and it occurred right when it needed to, at the 2020 to 2022 support zone. Failure of silver to hold here could have opened the door to the low 20s. Now that support has held, and he thinks silver plays a catch-up to gold and rallies to its earlier highs this year, about 13% to the upside, and ultimately in the last 12 to 18 months, may hit its all-time high near $50, which is 60% higher than its current levels. Whether these moves materialize remains to be seen, but given how stretched the gold to silver ratio it is, silver appears particularly well positioned right now. That is true to some extent. However, I believe more than ever we've been seeing higher than normal gold to silver ratios for long enough now time that the new normal for gold to silver ratio is really tough to pin down. And if anybody was going to try to pin it down, as I have, it's somewhere in the high 70s probably at this point. That is kind of the new normal gold to silver ratio. But of course, it could fluctuate because it seems to just keep creeping up higher and higher and higher. And now here it is, over 100 to 1 yet again. Now, the catalyst for silver to catch up to gold could be a short covering rally. And we've talked about that with a short squeeze. In fact, we'll get into some of that when the iShares Silver Trust, one of the largest ETFs, is currently experiencing its highest short interest on record. A similar situation occurred in 2011 near the peak of the bubble, when shorting paid off for traders. However, another parallel can be drawn going back to 2022, when high short interest coincided with a bottom in silver prices, helping to fuel a near doubling in price since then. A short covering rally in SLV could provide a significant lift to silver in the near term. We're seeing a similar setup with the Sprott Silver Trust. We've talked about that as well, with just over a third of the size of SLV. While we see a dramatic spike in the short interest level, and should silver begin to break out, these silver products may potentially see dramatic price increases in the months ahead. So after the pause of the tariffs, the S&P 500 jumped over 9.5%, which is its biggest rally since 2008, while the gold to silver ratio hit that rare 100 to 1, a milestone seen only 3 times in the past century. Silver looks undervalued, potentially rallying to this year's high, about 13% to 60% or $50 over the next 12 to 18 months. That could happen, is what he's saying here. Looking at the record short interest in the iShares Silver Trust and the Sprott Silver Trust, could be a short covering rally if the historically stretched gold to silver ratio indeed favors a catch up in silver prices. So he has increased his firm's exposure, putting his money where his mouth is, viewing it as a potential rare long-term opportunity. And that makes sense on the surface, but there's one glaring thing that the author is missing out here. This is extremely important to be cautious whenever buying silver, expecting it to go to $50 or some greater number, because we're in a unique situation with gold. In fact, it's so unique that it covers all of those periods. What is happening now with gold has not happened in those other times when the gold to silver ratio reached 100 to 1. What's keeping gold high right now? It's 2 things. In this very present moment in time, central banks continue to add to their vaults by purchasing gold. And gold bars, these good delivery bars, they are adding more to their vaults at a record pace. We've not seen this type of activity since 1967, and it's increasing more. And so this is unprecedented in a way for gold, and that is propping up gold's price and moving it in a northerly direction, and now to all-time highs in nominal dollars. And we're only a few $100s away from reaching an all-time high in real dollars, adjusted for inflation. So gold indeed is shining right now, and there's no sign of it slowing down anytime soon. And so the gold to silver ratio, I think, is becoming less important in terms of making the argument for movements or where silver is going to go in comparison, because they're really 2 different markets right now. Much more widespread difference between the 2 in terms of their use cases. Industrial being the case for silver. It's got over 10,000 uses. And there weren't as many uses for silver in 2011, I dare say, and much less versatility in silver's uses in 1980 as well. And so that means that there's a push and pull, and the dynamics of the silver market itself are relatively complex. And now, does that mean that the price is going to stay where it is and be suppressed or pushed down because of the market forces or because of the big banks? Not necessarily. I don't know. But nonetheless, I think that because of that and because of the dynamics and the market conditions, it's becoming less and less of an argument to be able to be made when the gold to silver ratio moves as wide as it has been. So just keep that in mind. Now, the other thing driving gold's price right now is the trade war between China in the United States, and Chinese investors putting record numbers into their ETFs in silver. And so that is causing, or ETFs into gold, rather. They're ETFs into gold. And Chinese are taking in more silver. They're importing it. But a lot of their investors are getting into gold right now. Not only in the physical form, but also in ETFs. So those are things to consider here, which is why if you want to look at this as a generational buying opportunity for silver, be forewarned that this could continue for quite some time, and the gold to silver ratio, mark my words, will remain high. It may fall below 100 to 1, but I don't think we're going to see it fall below 80 to 1 anytime soon. And certainly I don't think we're going to see it fall below 70 to 1. Because remember, the last two times that it went to 100 to 1, the previous narrowing of the ratios during the bull runs were much wider as you went. From 16 to 1 in 1980, or thereabouts, to 32 to 1 in 2011. And you know, we've not reached another $50 silver milestone yet. So likely that next $50 milestone, the gold to silver ratio is likely not to fall much below 70. That's my view on it. Let me know what your thoughts are in the comment section below. Hope you found this video informative, insightful, and educational. I like to bring you the latest news and analysis in the world of precious metals. So hope you will consider subscribing to the channel. And with that, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.